All right. Good day, everybody. Good morning, if it's still morning where you are. It is Sunday, August 16th, 2026. And this video is going to be a video that will help plan for the week to be for the week ending August 21st, 2026. Because Saturdays are for reviewing the week that was, and Sundays are for planning the week to be. Just as a disclaimer, I use basically CRT and 2023 model turtle soup from Romeo. You can find Romeo at Romeo TPT on Twitter. That's the whole analytical framework that I use. So if you're curious. So let's just jump right into it. I'm going to start off with precious metals. So longer term, I am bullish in precious metals. I think that we are in the middle of it's basically been confirmed at this point as of last week and the previous week's trading. This is the monthly chart, and so it's basically like we're talking about a 3-month. Actually, let me just count, make sure this is the monthly here. 1, 2, 3, 4, 5, 6. Yeah, this is the monthly chart. So yeah, we're looking at essentially what has begun already in July. I'm sorry, in August. August is the first distribution month, so it'll be August, September, October. I remain bullish on silver and gold. This is on the monthly time frame, right? This is on the monthly time frame. Now, a lot can happen in silver and gold on the weekly time frame, on the daily time frame, and the 4-hour time frame. So let's open up with this. So actually, just a quick note. So silver, I'm targeting the midpoint, 88.96 per troy ounce, and by the end of October, by Halloween. And then for gold, I'm targeting the midpoint, the equilibrium of $4,780 per troy ounce by that same date. And then gold and renminbi is where we're really seeing a little bit of pushback. And this is so why am I even caring about gold priced in renminbi? Aren't all commodities exchanged in dollars in the global financial system? They are, but the Chinese have proven themselves the marginal market participant in gold ever since January, ever since, you could say, even going back to 2022. In June, the Chinese central planners have taken many steps around kind of like getting full control over the way that gold is priced. You can do your own research on this. Just look into the Chinese opening, quote unquote, opening the gold window, which is, so the U.S. had a gold window that was closed, I believe, in 1933 to private citizens, but then the gold window remained open. And with the U.S., they had like a peg at $35 per troy ounce, which was the Bretton Woods Agreement, and then that sort of dissolved in the early 70s with the end of the Bretton Woods, or the repeal of the Bretton Woods Agreement. China isn't doing the exact playbook. They're not really doing like the exact Bretton Woods playbook, but they are using gold as a medium of international exchange to ensure that renminbi is considered by the global market participants, especially their bloc allies, the Russians, etc., as good as gold, right? They're trying to make the renminbi as good as gold. Now, part of this is they wouldn't do this without first ensuring that they can essentially be the market makers for gold. And so it's between them and London, obviously. So, but yeah, we won't really get into it. Here's the thing, another little macro note about gold before I get back into the Romeo Turtle Soup CRT stuff is gold is actually sensitive to real yields. or real rates, which is it's a little bit of like a macro thing, but it's basically the inflation as measured by CPI minus the 10-year yield, the U.S. 10-year yield on a Treasury bond. And there's a market for these securities called TIPS, Treasury Inflation Protected Securities. And so you can look at the chart every day, but when this goes up, it's essentially bearish for gold because gold has no real yield. So as real yield goes up, it's actually bearish. And I just want to highlight the China picture, which I'll go into when we look at the renminbi chart, gold price in renminbi. And I also want to highlight this as why would Westerners be a little bit, why would there be cause for a little bit of short-term bullishness in gold? So, okay, so this is gold priced in renminbi. And so what I showed you on the very first slide, I was actually started with silver and then I went to gold. But keep in mind that silver and gold, they are playing out, or they are distributing as a result of a 1 month time frame 2023 model. So in other words, they will be bullish over the next 3 months. But there's a big caveat on the shorter time frames. So this actually resolves to a 1 week time frame. There is actually a bearish 2023 model that played out, and it formed. We hit what I believe is peak manipulation. We hit it last week. The Thursday Asia session immediately following the CPI. And so if you don't really understand the relationship between CPI and gold, just go back a little bit to the talk about real yields and how real yields can really start to put pressure on gold. And we had our 30-day essentially rolling update on inflation with the July inflation data that came out on August 13th. So here's why I think it's really conspicuous in terms of renminbi is if you go to it's a Globex chart. I can't remember what Forex broker it is, but if you type in XAU CNH, which is essentially gold priced in offshore Chinese yuan, gold priced in renminbi, what you get is you see that the high of the week last week was exactly 30,000 renminbi per troy ounce. It wasn't 30,001. It wasn't 29,998. It was exactly the 30,000 psychological level, as if there were some other financial mechanisms in place to keep price suppressed below that level, and by entities that don't. I'm just going to set this down really quick. I'll be right out, okay? So if you have a 1 week time frame 2023 model, it begins with a 1 week CRT, and so the whole bullish part of this range, it was actually achieved in just 1 week of trading. I'm rounding a little bit because there was just a lot of like stabs into the sell side liquidity that occurred over, I believe it's about a 10-week period. And then we had one big bullish week to start August. And so congratulations for those CRT turtle soup traders that caught the bullish move. But I think that there's potential on the weekly time frame for a grind lower into a breaker entry. And I actually think that we might dig into the breaker and get down to, I mean, if they, in air quotes, the powers that be, picked exactly 30,000 renminbi per troy ounce, then we might look for another psychological key level, which is exactly 28,000 per troy ounce, which this lower wick of this is on the 4-hour chart. Yeah, it's on the 4-hour chart, right? No, I think this is the 8-hour chart, right? Because 145 divided by 3, about divided by 2. So this, yeah, anyways. But this key, in other words, to hit 28,000 renminbi per troy ounce, we actually get below that, the low of that last candle. And for Romeo traders, CRT traders, we've dug into the last fair value gap, the last bullish fair value gap in a series of consecutive fair value gaps. So we have 1, 2, 3, 4, 5, 6 fair value gaps on this time frame during that initial bullish aggressive move. And so there's obviously a lot of internal liquidity that needs to be ironed out. And with if you go to the weekly, let's see if I've got a weekly chart for you guys for gold. I might have not put it in my journal. We might have to just go to Brave really quick. Let's go to Brave really quick, and I want to show you because I want to use my I want to be able to correctly show you guys. Sorry, my streaming software isn't quite configured the way it should be. There it goes. Okay, so now I can hop around on time frames. Yeah, so I've since annotated a little bit better. So this is the 4-hour chart, and check this out. The swing low of that candle doesn't get to the key level in renminbi terms. So that would be a really logical target from 30,000 renminbi to per troy ounce on the dot down to 28,000 on the dot again, maybe, right? There's some other like things that are too they're too good to be like a coincidence, like they're too perfect to be a coincidence that I can show you. And when you see things that are like too nice to be a coincidence, then you think, yeah, this is not a coincidence. This is market maker fingerprints happening here. So yeah, so let's go to the weekly, because it's the weekly that we get our bearish 2023 entry here. So let's talk about pros and cons of this hypothesis. A pro is that we wicked above the key level. The key level being the high of this entire range. This is a little teeny fair value gap too. So the con is we actually closed above the previous week's high, right? But I would say that a higher time frame turtle soup potentially takes priority around lower time frame market profile considerations. That's kind of like what Romeo tries to teach us. But here's the advantage of being on the weekly chart now is I can just show you in broad terms that we have, if this is still the manipulation candle, so this is still part of the range, and then we are due for 3 weeks of distribution to the downside. So it's a pretty significant drop. I mean, trading gold is always really exciting because of the daily realized volatility, but that is a 5.13% drop over those 3 weeks. 15 trading days, 5%. I mean, this is going to be a pretty good move. Not as good as this 1 week huge move here for those of you who are lucky enough to catch that, but a pretty good move. Definitely something to bet on here. Now, if you go to the 4-hour chart, I want to show you lower time frame entry signal. There was a 4-hour model number 1 that played itself out. So in other words, here is the candle that's important here, because it was the candle that broke the high. You could even call this the important candle, because it's essentially like a 3 drives, like kind of intra week 3 drives here on the 4-hour chart. And so obviously we have we close below the low that broke the high, and then we stab back into the candle itself. As far as continuation opportunity, this light blue line is the top of the range. I definitely would expect early, Sunday Asia, like the Monday morning in Asia, to trade into the probably above this swing high, actually. Like probably try to fill in this order block, or essentially it's not really an order block. I guess it's a breaker. It's a breaker block. But yeah, I would expect price to try to fill this in, at least hit the consequent encroachment. if you go and look back at gold in dollar terms, there's a really important key level there, which is 4,400 even, 4,400 even. And we didn't quite hit that on Friday. Here's the other thing, and I trade gold in dollar terms, obviously. So we have a 2023 bullish model that's still playing out. It is an 8-hour model. So this gives us cause to have a timing for the eventual reversal. There's only one more 8-hour candle left of bullish price action to be expected, and yeah, I mean it. You could literally say that like this could be a Romeo order block, right? The wick of this guy. And it's still valid because we only had one close above the wick of that candle, right? So we had a close above, then close below, then close below, then close below, right? And a fair value gap. Is that actually a fair value gap on the 8-hour? Not really. So yeah, again, we don't really have an 8-hour fair value gap, but again, I think we should be actually operating on the 4-hour anyways. So yeah, maybe the 4-hour use this one. You can tell I'm not really concerned with getting the lower time frame signals correct. I'm more concerned with getting the analysis correct and the timing correct. But yeah, so look for peak, look for the exit to be, so obviously there's a long gold scalp here in Asia in a few hours when the market's open. But then look for the London open and maybe perhaps the 5 a.m. to 9 a.m. Trading, like with a New York kill zone within there. Look for those to be the every exit is an entry. And so we're exiting our 8-hour bullish 2023 model, and we are entering our weekly down 2023 model. I mean, I could be wrong, and obviously, use stop losses and use your lower time frame awareness. Treat it all like scalping, right? That's a good way to kind of be right, even though you're wrong on the overall weekly bias projections. So yeah, that is gold. Let's go back to PowerPoint, and I'll get the rest of the weekly planning finished here. I think gold. I think I'm going to be focused on gold for the majority of the week. Though I'll tell you what my number 2 is. So currencies, I'm a little bit less. I don't know. I just want to tell you it's that Friday in the euro, the pound, to some degree the yen, definitely the CAD. Friday's price action was, there's probably going to be a lot of momentum carrying through. So I'm just going to make a blanket statement and tell you that I'm expecting classic trend expansion next week into some, buy side. If you're, if the foreign currencies, if it's not the quote currency, if it comes first, if it's the, the bid currency, then that's going to be, we're going to be looking for buy side liquidity, right? So obviously with the euro, I'm just highlighting the fact that we have this descending trend line liquidity that's going to be purged. I would definitely expect some interaction if we trade higher, if we get like 80 pips out of or that would probably even be about 100 pips out of the euro. At that point, you'd expect a little bit of like digestion, maybe some pause CRTs, depending on how. But see, the thing about currencies next week is we're still pulling out of the summer doldrums. People are kind of coming back from vacation, like the kids are going back into school, and there's no real like red. I think the only red folder news event, there's like some. So obviously there's like Aussie stuff, there's pound stuff, but then the only U.S. centric red folder is the FOMC meeting minutes release, which is kind of, to me, I think it might not be super insightful. You could go either way with it. But definitely like be aware that 2 p.m. Wednesday afternoon might be used as a catalyst. It might be one of those things where like really bullish day on Monday, then maybe inside bar on Tuesday, and then all throughout the London, the NYAM on Wednesday, it might be kind of like this rangy trade, but then maybe minutes come out and then it's like boom, a big bullish spike for continuation. But I actually think it's just going to be like your classic buy sell week. So here's pound, and you can use options, volatility. You can use it's like if you look on like Tasty Trade, you can look at like the weekly expected move, and you can like start to price in like what is the probability that the pound will go 100 pips next week in terms of just the way that the options are being priced, and that can help you like identify, the pound really might make a run between, let's say if it's not next week, it's the week after for this drawn liquidity, like to finally hit this candle high. I mean, we're kind of in this weird model where it's a symmetrical CRT basically, like this down close candle, then manipulation, and then we're slowly distributing higher in the pound. And then here's CAD. CAD was one of the best performing foreign currencies versus the dollar last week. CAD has like an extremely accelerated rate. Like CAD is, I definitely think that we're in the middle of a bearish CRT in CAD, and that by the end of August, so next week would be like the third week, and then the following week would be like I believe the fourth and final trading week of August. So really over the next 2 weeks, we're going to see the final downward expansion into this new month opening gap and really just be taking out the lows. I mean, I really can't think of reasons why CAD wouldn't at this point. But yeah, so we're essentially looking for kiss of death at this point, like monthly kiss of death trades to carry us through the rest of the range in CAD at this point. So here's like a lower time frame. So like early next week, I would predict 139 round number in dollar CAD on spot, and maybe digging into that breaker. So that breaker is like a little higher than that, and then just a continuation, like again, like the euro, like the pound, like a classic selling, and then maybe at the end of this week, like if we hit this, we hit the body, let's say the body of that daily, potential bullish order block, I guess, technically a bullish breaker, hit the body of that, and that might cap the week. So like another pretty good like 100 pip swing in the CAD, which is a lot for the CAD. The CAD doesn't move in percentage terms. The CAD is actually less historic volatility on average than the rest of the currencies. So the CAD is actually like really moving. The fact that the CAD's outperforming is like a real telltale sign that it just has a lot of momentum. There must be just a lot of tailwinds. Natural gas. So that was my loss last week, but I'm going to return and just kind of like admit my mistakes, because it really was an analysis mistake that led into this loss, that I wasn't really processing that we were actually on a 2 week. So this is the 1 week time frame, the chart we're looking at in natural gas. This is a 2023 model, a bullish 2023 model below that key level there, like this big up close candle, or maybe stabbing into the both the open and the close of the previous candle, like, and the monthly open, the May monthly open or April's close. There's like all sorts of key levels we just stabbed into with that final. I'm considering this the peak manipulation in natural gas. We are in a regime where money is actually capital. We'll call it capital. Capital is leaving the financial system, and it's actually headed into the real economy. You get, there's like AI capex, there's reindustrialization of the US, there's hoarding by the countries that have central planning, like China. There's all sorts of stuff there's Europe. I mean, Europe is basically like bracing for another natural gas shortage come the winter time, come the colder months. So like, yeah, there's a lot of reasons to be bullish natural gas as we head into the beginning of the fall. So yeah, so it's over the next 6 weeks, since it's a 2 week model, there's so 3 2 week candles. I'm projecting 26% bullish move. So all the way up to, we'll call it 3.40 round number, like maybe into the open of that candle as a key level, and then using the wick as an order block and kind of like processing from there. Yeah, so here's the thing about NG, natural gas, on the lower time frames is we're in a daily bearish 2023 model. So if this is the origination candle and there's the high of the range, and we went 1, 2, 3, 4, 5, 6, 7, 8 candles to form the range, 3 candles to distribute lower into like 0.618 into an OTE perhaps. I'm not going to be trading natural gas at all on Monday. On Tuesday, NYAM. Actually, I'm going to go mark my chart right now because I'm not sure if I actually marked my chart, just to like remind myself. I'm not going to touch natural gas until this thing has completely exhausted itself. And by thing, I mean bearish, lower time frame, lower time frame 2023 model. Let's see. So Tuesday 6 a.m. we'll call it. That'll be like my like watch for further manipulation into distribution. I mean, we could hit as low as 2.649 and just really like dig into that really would be an OTE on that one. But yeah, let's go. Oh yeah, so that's actually it. So it's, for me, I'm probably not going to be trading FX as much, just because, well, I will trade the CAD. So I guess in terms of conviction, I have a lot of conviction on natural gas. I have a lot of conviction on CAD, just because I think you could probably be wrong in CAD and still get some scalps, if you're like counter trend scalps. And then I'm probably less likely to trade just generic FX like the euro and the pound next week. And then obviously with precious metals, like, it's all about Monday. Like you get the week, we have the weekly model to be short, and we have the 4-hour entry signal that has played out, but we might need another failure swing and another retest. And then like if Monday forms a range, or maybe even just like the 8 hours between the futures open and then London. But yeah, so like it's precious metals is like one of those, like, I'm gonna have high conviction if we see more evidence of like, yeah, I shouldn't be so scared of precious metals, but it's just so easy to over leverage. And if you have access to trading like a micro gold futures, definitely trade micro gold. Don't trade the full GC. Alrighty, that's it. Thank you so much for listening to my planning the week to come. And next weekend, I'll be reviewing these 3 calls on the Saturday, on reviewing the week that was. Good luck trading out there. Thank you.